Welcome to my channel of Contextual Trading. Today again we are back with another technical analysis of one of the stocks, and we are going to see, as you might have understood from the thumbnail itself, the analysis of S Bank share. Okay. Along with this, today with the help of some of the questions, I am also going to help simplify the thought process before you take a position, or it will also help you to take the right decisions if you are already in or if you are already in the positions. Okay, so stay until the end of the video, and I'm sure you will have many things to take away today from this video. Okay. Yes, so as always, please don't consider any of the information as a buy or sell recommendation. It is only for educational purpose. So yes, let's begin. Yes, so here again I'm going to repeat the concept of market price cycle, and yes, if you have not seen my previous videos, I recommend you to go back and check the videos. I will put the link in the I button as well as in the description below. Okay, so these are very basic concepts, and again we are going to come across it, so I recommend you to please go and watch the previous videos. So here we see a good downtrend, which is nothing but the markdown phase, what we call. This is the markdown phase where there is a huge selling, capitulation selling, and many weak hands are obviously trapped and they are selling with huge losses, as we understand. And after certain point, we see that we are starting to get a sharp rally. Okay, so here we see this is the first instance where we see a sharp rally, which is on account of increase in the volume. So this is indication that the operators have entered, and as we know, this is called as preliminary support, which is provided by the operators. So this is our first scenario where we understand that the operators are entering, and the markdown phase is about to end. Okay, and we see how the continuation of the selling remains and into the selling climax, with which also has a huge volumes. Okay, and then obviously we have the automatic reaction and then the secondary test. So we enter here in from a markdown phase to a trading range. Okay, so this is a trading range. So I'm not going to go in detail, we are going to see this in the next slides, but the main intention here is to show you the long-term context of this share S Bank. Okay, and we see how after such huge sharp fall, we see a strong consolidation. Okay, and the stock is resisting to continue to fall down. Okay, so we know that since it has been holding to the similar levels for such a longer duration of time, which is about like this is one, I think 1 2 3 and about 4 years, the stock is in the consolidation, and that also with the huge volumes that we are looking. So this is a very strong indication for us that there is some force that is holding this stock from below. Okay, and that is one of the main reasons why the stock is not falling down. So here we understand that since the stock is in congestion and it is no more falling down for last 4 years, so we have certain idea that there is some force that is acting, and which is nothing but the operators are buying. Okay, which means that the stock is in accumulation. So this is just a glance first outlook which we see from the long-term context point of view. Okay, so let's move on to the next slide. Yeah, so this is the trading range context. Now here I have directly taken the picture from the selling climax and not the preliminary support. So I discussed this previously in the first slide itself. What is the preliminary support where the operators have entered and continuation into the selling climax. Okay, so this is the climatic move. Then we have automatic reaction, and then we have a secondary test obviously of this selling climax where we see a strong buying by composite operator. So yes. So these selling climax and automatic reaction, again they define the trading range, trading boundaries for us. As you can see, this is the trading boundaries that I have already drawn. So today I am going to discuss some different concept, and not the regular accumulation trading range that I usually do in my videos. So here I am going to discuss a little bit different concept that I want you guys to understand. Okay, so here we see there is a sharp fall. Okay, so usually what happens is there are many sellers or weak hands, those are going to buy at these levels. Okay, so people are still thinking that there is going to be continuation and they buy. Okay, unaware about the fact that the operator is against their positions. Okay, so whenever there is such sharp fall in the markets, usually a lot of supply is trapped at this location. Okay, so one concept is when this kind of a sharp fall happens, normally the operator does not mark the prices immediately back. Okay, so the very obvious reason is that he is going to get the stocks at a very cheap price, and he is not going to let the opportunity go. He is going to keep the prices low in the lower area, and he is going to accumulate all the shares available at the cheap price. So this is one basic reason. And if we consider it emotional, if we consider it by emotional thought, you will realize that all the people who have bought at these levels, they are going to undergo a strong emotional pain, because the stock is not at all moving, and therefore they are going to take a decision of selling over the period of this course. Okay, however, for operator the timeline is going to be very huge, so it does not really bother them to spend a lot of time in this region. Okay, so the concept here that I want to share with you is about the supply that is being trapped here. Okay, so usually what happens, we know that many sellers are stuck here. So these all sellers, whoever are present, they are going to wait for the opportunity to sell whenever they have it. Okay, so you see here, operator rises the prices higher. Okay, and whenever he comes across this region, there is a sharp increase in the volumes. This indicates that there is an absorption that is happening. Okay, so the sellers are now active and they have started to sell aggressively, because the prices are moving at their levels, and the operator is now starting to absorb the selling. Okay, and see again how due to the selling and the liquidity that is generated, the operator continues to absorb the stock and again into the lower area of the trading range. Okay, so this happens again and again, the process of absorption. Okay, you see here again, here also we are able to see these strong volumes. So this is nothing but the absorption of the stocks, okay, that are available. So again, if we see moving forward, here we see there was a small test due to a small volume presence. We understand that this was a test of this buying, whatever the absorption was done by an operator at these levels. You see how he spends a lot of time here, and he is doing the test of whatever he has done buying in this particular bar. Okay, and after a successful test, see how the prices have slowly started to mark up and to explore the region of the supply where it was trapped previously. As soon as the prices have reached the region where the supply was trapped, the sellers get active and they start to sell aggressively. Okay, as the sellers are getting aggressive for selling, the operator is now buying them. Okay, you see, which is nothing but what we call as absorption of the supply. Okay, so operator is absorbing at these levels, the supply has increased, and you see there is again a sharp fall. So if we speak on emotional level, you think that suppose you are stuck here, or here, anywhere in this region, and you have not yet closed the position over the period of almost, like, this is about 2 years. Okay, so this is 2 year time frame approximately. Okay, and now you are under pain, you were in loss for such a long time, and now you are getting an opportunity to sell your stocks. Definitely you were waiting for this opportunity, so as soon as the prices come to this level, you are going to sell. Okay, and this sold stocks are going to be absorbed by the operator. And let's say you assume that you are not thinking of selling, but see how the mechanism takes place in this region, or how the operator behaves in this region, so that people are scared and they are provoked to sell their shares. Okay, so you see the first bar, how strong he marks up and eventually closes at the low, and immediately the second bar is so strong down bar that it creates fear, and again you will have the thought of this kind of actions. People are going to remind the pain, people are going to remember the pain that they have came across when they were stuck here, and the selling was such huge. Okay, similar kind of emotion is going to be attached here. Therefore people are again going to think, and not going to miss this opportunity to sell their stock. Okay, again we see there is again reversal, and here people are going to have one more opportunity to sell their stocks. Okay, so just imagine here the stock is trading, and again you are thinking that okay, now there is a reversal in the stock, and there is a possibility that the prices are going to rise. Therefore you take a decision that not to sell. Okay, but see how operator behaves. As soon as the 2 days are passed, on the third day he gaps down. Okay, the only reason for gap down is to create a fear. Okay, as soon as this fear and the gap down is created, I am sure all the weak hands, those who have trapped and those who have taken decision here not to sell, are definitely going to sell here, because again this whole mechanism is going to create a emotion of fear within them. Okay, so after a certain duration, all the supply has been absorbed by the operator, and eventually the prices have started to move higher. So here we get a nice sign of strength that is reaching until the median of the overall trading range, which is I think approximately 30, and obviously we are going to come across the supply that was trapped here once again. Okay, so here we are getting to see a very huge volumes. So these kind of volumes we have never seen them before throughout our trading range. So this is a very strong indication of buying. At the same time, we must not forget that there is also supply present in this. Okay, and how do you understand there is supply? Definitely we have reached the previous levels where the supply was trapped, so definitely there is going to be selling within this. Okay, and there is one more concept where one should understand, that where the operator is spending time and conducting his business. So this was one region where he has spent a little bit of time and conducted his business. So expect the markets or the operator to spend time again in this region. Okay, so yes, we are going to see this particular analysis in detail in the next slide. So let's continue. Yes, so here this is the last slide we are going to discuss, as I told you here. So we will be discussing first what next for the S Bank current with the current situations. Okay, so this was the last strong sign of strength that we were discussing previously, and here you see there is a strong markup by an operator reaching to the median, and then there is a strong pullback. So this is again a small change of character concept for us. So this is nothing but called as principles within principles. So the principles always remain same whether we apply it for a very long term trend or for a short swing. So here we see there is definitely a change of character, and therefore we are going to expect a trading range for therefore we are going to expect a trading range here onwards. Okay, so as told previously, whenever we have sharp pullbacks, don't expect that you are going to get immediately a sharp rally here. Okay, so this is very difficult or not a frequent situation that operators are going to do, because he is going to get the stock at a very lower price. He is going to spend some time, he is going to let the emotion of this weak hands play, and then let them make the decision of selling here. So normally what happens is all the weak hands are going to buy here. Okay, these are the laggards, we can say, those who buy at the very end of the rally, thinking that the trend is going to continue usually, but this does not work. Okay, there is supply present in this, and stock eventually collapses. Okay, so expect a trading range for here for the next couple of weeks or months, and then we are going to see how there is development. However, it is very important to do the contextual analysis that we did previously, the very long term context, because that is going to give us the confidence. Okay, for shorter term definitely this is going to be a small pullback, but for the longer term, to hold your positions longer or to take very firm decisions, the analysis of the previous context is very important. Okay, so as mentioned initially, we are going to discuss few of the questions which are going to help us simplify to take the positions, or you can or it will help you to make a good decision if you are already holding some of the positions. Okay, so having a clear state of mind or a clear thought process before taking a position is very crucial in trading or investing. Okay, and these questions are going to help you to have the clarity. Okay, so these questions might seem very basic, but if you ask these questions to few of them, you will realize that you most of them will not be able to answer them. Okay, so yes, let's see. So this is the first question. What are the reasons and the intentions to buy the stock? Okay, so one must be very clear that why are you taking the stock, why are you buying it, what is the reason for the buying, what is the intention for the buying. Is it that you are going to hold it as a long term investment, or you are going to hold it for a long term swing trade or a short term swing trade or an intraday? Okay, so usually long term investment means you are going to hold the stock for multi years based on the fundamental study or technical, whatever it is. And long term swing trade meaning you are holding the positions about 8 to 10 months or little more. Okay, and for short term swing the duration might be 2 to 3 months, little shorter than the long term. So these are just the numbers that are derived by my experience, and these are not the standard numbers to define these terms, but these are based on my experience. Okay, or whether the position that you are taking is for intraday. So having this clarity why you are buying the stock is going to help you to take a very good decision when you are in the position. Okay, so next question that you should be asking is how much risk you can take. Okay, so defining the percentage risk before you are buying the stock is very important. So whether you can take the risk of 5% or 3% or whatever, or 10%, etc. So this all risk should be defined before you are taking the positions. Okay, because this is going to help you whenever there is the pullback in the markets, and if you have the clarity of your thoughts, you are stuck. So if you have this risk in your mind, then you can easily cut off your positions and then uh, go ahead with it. Okay, so having the risk clarity is important before you take the position. Next is to have a clear or a good trading process or system that is defined. Okay, so for individual it may vary, the trading processes and the system might be different from person to person, but to have this framework or to follow this process is very important. Okay, one cannot just be in the markets without any process or a framework. Okay, so during this process it is important to respect it. Okay, and not to deviate the process. Like for example, you have a process set, let's say you have a process where you are going to book your profits at 25 and book your losses at minus 5%. So this is just an example of a process. So if this is a process set by you, you must respect it and follow it, and not to let your emotions drive whenever you are in loss. Okay, so this is very important, and this is going to take some experience for a person to develop, and not easily, it is not going to be easily achievable. Okay, so you have to take experience multiple times, face the markets and see how the emotions are developed, and then uh, proceed accordingly. Okay, and the last reason is or sorry, the last question is that you should have a good reason to sell the stock. Okay, as you are going to have the reasons to buy the stock, you should also have a reason to sell the stock. When are you going to sell? Is it that your goal is fulfilled? Just like I mentioned previously, if your goal was to achieve only 25% profit, is your goal achieved? Or if your goal is to hold for a very long term, like a 2 year stock, have you reached your timeline of 2 years? So what is the reason to sell the stock? Or do you have any other good opportunity other than the current stock? If if it is so, then yes, you can sell your stock and move to the other good opportunity that you have. Or whether your stop loss is hit and the stock price is trading below the percentage risk that you have defined for yourself. Okay, so these are very very basic questions, like one must ask yourself before you take a position in the markets. Okay, and you should have that clarity of thoughts, why you are in the market, why you are purchasing, why you are selling. So all these things should be already be cleared in your mind and in your thoughts, so that whenever you are in the position, you do not get carried away by the emotions. Okay, so I think this is it for this video. Thank you so much for watching the video. If you like the video, please comment in the description and share this video, and see you in the next video.